I think there was a little confusion about whether I was getting announced, but I guess I got my big, kind of an older shot of me, but that's okay. So I was asked by Kurt to talk a little bit about 10 mistakes that you can make in an ICO. And obviously a little bit of controversy already in the first two, and I'm going to throw my own opinions in. So just a little bit of history. I've been called the Godfather of the ICO by CNBC and a few other places. I have worked on a number of them. About 1/3 of the entire value of the blockchain are tokens that my company Transform Group or me personally have worked on either in the PR or advisory area. So I do know a few things about this area. So hopefully that gives me a little authority when I give an opinion and that I'm not completely full of shit. I also read a lot. I'm not a lawyer. You haven't seen any lawyers, to my knowledge, on stage yet. But I do know how to read. And so I'm going to talk a little bit about things that I've actually read in the laws and in the SEC.gov, which I encourage for bedtime reading. Okay, so that is my avatar, courtesy of Kitty Cash, which is sort of the crypto kitties of Sky Coin. You know, I don't advocate violence, but I do have an avatar with a Godfather machine gun, so I'm happy with that. So the first mistake is rushing your campaign. I see so many companies that, oh, we have to get out through the window. We have to get out before the window closes. I've been hearing this since February of last year. Window's going to close. Window's going to close. So, and it keeps growing. In fact, it probably has grown way too high right now. In 2015, there was $15 million of ICOs. 15 million. Augur was the largest one. It was 5.6 million. I think we worked on like 2/3 of the 15 million. February of this year was 1.5 billion. So we're on a $15 billion pace for the year. 1,000x in 3 years. Now we've certainly grown in market cap, even at today's, you know, 6,800, 6,700 pullback from this morning's 7,400. It's obviously some confused, choppy waters right now. Much of it being the FUD that's been going on, having nothing to do with Bitcoin. But the whole thing is you don't know when the window closes. And if it closes, it's not closing for like decades. This, as Fred had mentioned, is like, you know, a large growth. When you're going to look at having 1 billion users of this in 5 or 10 years, there's going to be areas where all of a sudden the valuation gets a little bit ahead, as happened in the .com era. But you know, you could have bought Amazon.com for about $5 back then after the market gave up on internet stocks, and obviously it's done pretty well since. So don't rush your campaign. You want to make sure that it's ready. In the old days, they had an Orson Welles commercial about some really cheap wine, and it was like, we will not serve its wine before it's time. I would say that almost all ICOs that I've worked with or that I've observed closely or that I've advised that decided to go and rush things out before they were ready. Hey, we're raising 50 million. Hey, we're going to do it in 6 weeks. And they would raise 4 or 5. Whereas Cosmos is a great project, you know, San Francisco founders, and they delayed their offering and kind of tweaked it 5 or 6 times, and their community stayed with them. And when they finally went out, you know, started as Tendermint, then it was Cosmos, and several different models. I've seen a whole bunch of decks. They raised $17 million in about 30 minutes because their community stayed as long as they were being informed. So the second mistake you can make in an ICO is don't listen to your community. If your community is growing, Telegram is a great tool. Bitcoin Talk still gives you, you know, the positive and negative feedback. Twitter, you know, you can't advertise on Twitter, but you can sure the hell talk on Twitter, and you can put your hashtag out there, your $ symbol, and build your community. And your community, if they're all clicking and evangelizing, you know, and you have to push something off because you don't like the market conditions or because there's something wrong with the technology, don't rush it out. Don't go like, oh, the price of Bitcoin just dropped, we better go before it's down to 3,000. So, on the other hand, there's another mistake is not listening to the market. So, I'm still amazed in this sort of pullback period, which I don't think is going to go to 3,000. And I don't think it's going to be 50,000 by the end of the year, but maybe by 2021, the next halving. But the market will move up and down, and it moves up and down on a lot of different reasons. And just like the stock market, these non-securities that are utility tokens, and I'll get to that in a little bit, they really act like commodities and other tradable goods. They work at news. They also work on trading points, 200 moving averages, and people, the obsessive traders, the day traders, the professional traders will look at these things. And if the market's saying, hey, you know, things are going down, that's not the time, even if your product's ready, to go out and you know, just say, well, this was on our timeline, we're going to do it regardless. The other thing also is, you know, it may have been a couple of years ago when things were heading to the moon very quickly that you could go out and raise $50 million on a white paper. It's not that easy to do it these days, and it's not desirable to do it these days. Your team, your community will all thank you. If you can build your product on $2 or $3 million, don't raise more than 5. I mean, the biggest creativity practice, I would say, in blockchain ICOs the last year was, where the hell do I spend that $150 million since, you know, I already have the product halfway built? And so people started venture funds to seed products. And in a bull market that gives you that money, sure, you can come up with those things, but don't act like you need it. Don't tell your community you need it. Obviously, who needs your token? If you can't answer that question in a way that everybody you talk to goes, oh yeah, that's a great application. There's way too many. I mean, right now, this 1,000x growth when there's maybe been a natural demand growth of, let's be generous and say 100x. There's so many tokens that are just a solution looking for a problem. And there's so many great problems that we can solve in this industry, that we can decentralize medical records and go and, you know, I haven't seen, there's been some attempts, I haven't seen anybody who's really nailed the problem of giving the patient the medical record and them saying, doctor, insurance company, you come to me, I'm keeping my record. Across industries, there's a lot of great problems that haven't been solved yet. So don't be the 17th one who's trying to do, you know, a video game that's going to go and extrapolate on, I don't know. I don't want to name all the bad ones because they're just legion. But you kind of know them when you see them. And as an investor, I certainly know them when they see them, and I don't get excited. You want to make sure that if you're not talking to someone and someone's just really asking a lot of questions, you might want to tweak your business model. Fifth mistake is misunderstanding regulation. And I'm saying both real and imagined. Fred is right. We need utility tokens. This is software, guys. And just because somebody makes money on it does not make it a security. I thoroughly reject 80% of what the first speaker said. I've read these things. I'm not a lawyer. He's not a lawyer. But I've read the law. The Howey Act is not part of the 34 Act. It's not a law. It's from 1946. And most utility tokens on that first slide that I gave you, they are software, and they actually have utility. And the fact that somebody made money on it is irrelevant if you still have utility. I like to give several examples. The main one, since the Howey rule was about a fruit company, that was because they tried to go and do what wine companies have been doing for a long time. 4 parts of the Howey Act: common enterprise, expectation of profit, you don't have any ability to change the results, and no utility. Makes you security. So wine futures, hey, ICOs sound like securities, so do wine futures, right? The product's not built yet. You send your money to Screaming Eagle and they use your money to build their product. And you have an expectation of profit. You know you're going to get it and be able to sell it the next day because you bought it at a discount a year earlier. And if you hold it a few years, you're going to make it more. You have no way of changing their formula. If you call up Screaming Eagle and say, I think you should put a little bit more Merlot in, they're going to laugh at you. But why does the SEC not require that to be a security? Even though you're going to make money year after year, any point you can drink the wine. That's your utility. And I can give 100 other examples. And so there are utility tokens. But you can misunderstand regulation in a number of ways. Do your homework. Don't just talk to Wilson Sonsini and Goodwin Procter and the bigger guys, because they don't have as much experience as some of the littler guys who've had 10, 15, 20 ICOs. Talk to them both, and then make an intelligent decision, and also read the laws yourself, and the regulation and the lack of laws. The other mistake is choosing the wrong corporate structure or jurisdiction. Certain things that you maybe can't do in California with a for-profit, with already having venture funding, you can do by having a spin-off in BVI, perhaps as a nonprofit, and then going and funding something in Puerto Rico or in Wyoming. Wyoming, by the way, Caitlin Long is my hero. I've known her for a long time, and one person gathered a movement, just like Gandhi did, right? Smaller comparison, but she basically was pissed off that her alma mater, the University of Wyoming, would not accept Bitcoin because there was a law that said accepting Bitcoin violates money transmitter rules. She got that law changed, and she looked and saw what else was unjust. And it is now law, 60-0 it passed, and got signed by the governor. It's going to be a law of Wyoming on July 1st that you can go and have a utility token that is exempt from securities laws and exempt from money transmission laws in the state of Wyoming. And if you go and buy the token in an LLC in Wyoming, which is $50, you could be from any of the other 50 states. And they went to the SEC and they said, what do you think about this? SEC never answered. So do it. I encourage anybody who wants to go and be in the United States and have a true utility token, as long as you're not making fraud and you're not making representations that make you security, you're perfectly legal. And Arizona wants to do this now. Colorado wants to do this now. Marijuana is legal in 20 states, even though there's an actual law. Not a regulation, not a guess, not FUD, a law saying it's illegal, and you don't see tens of thousands of people being thrown in jail for that. You're not going to be thrown in jail for doing a utility token in Wyoming. Okay. So, mistake number 7, getting back to the boring stuff, have a great team. That's what I look at as an investor. It can be the greatest idea in the world, and if you've never done it before, I mean, if you're a genius, Vitalik, had 3 years of sort of doing things in Bitcoin and had a great white paper. If I'm looking for like Stanford PhDs, Vitalik isn't it, but he sure built a great team and built a great product. And we were very pleased to have been their launch partner on the PR side. So look at the advisors, look at the team, look at both the expertise on the crypto side, but also on understanding the industry. Mismatched or ill-timed marketing. So obviously one of the big things I do at Transform Group is marketing. And the timing is so essential. You don't want to be going, and I see so many people just, hey, content marketing, let's get as much content out there as possible. And then all of a sudden when it's time to launch, you try and get a story in TechCrunch or in Bloomberg, and they're like, oh, that's all over the place. It's old news. So you want to be able to go and time your marketing to your news. You can have content that is evergreen, that sort of builds your audience, builds intrigue in your product, but you also have to be able to save some juicy chunks to get that major media coverage. And you want to have it ideally right when you're about to announce your first early contributor funding from a bigger fund. And we did that with Salt Lending, we did that with Wax, we did that with a number of other tokens, and it's just magic when it all happens at the right time. Mistake number 9, not getting on the road. There's no lack. I run the Coin Agenda conferences. This is our 5th year. And, we used to be at one of the only investor conferences. I think we're still, sort of one of the premier ones. We're doing 5 times this year. We got Singapore and Malta coming up this summer, and our big annual one in Vegas. But I've seen people with great products, great pitches, and they're trying to do everything from Twitter and Facebook, and it doesn't work. You got to get in front and meet people, shake their hand, and if you don't go and have a pitch at any conference out there that's a legitimate conference, you know, if you're at this conference and you don't come back and you don't get a multiple on your money, go back and revisit your pitch. Because there's investors here. There's people who want to be part of your community. There's a lot of great conferences. Look and see who's speaking. Ask people who perhaps have attended before, and go to the great conferences. And also make sure it's across a wide geography. You may have a product that they don't like in America, they love in Asia. Okay, and I'd say the last mistake, and this isn't a David Letterman, I mean, they're all important, is not being ready to be obsessively consumed by the process of the ICO. The most successful ICOs that I've seen are the ones where the entire team is just on the road. I'm just amazed by the energy they have. You know, Polyswarm is a company that we've represented. They just wrapped up, and in under 3 months, they raised $29 million for antivirus software, finding the actual viruses by having, you know, it's an old process that it was very inefficient before it was decentralized. They were all over the world. I mean, I could barely, you know, pin them down where they were. Oh, okay, they're in Japan. They're over pitching here. Blockchain Terminal is another company we're working with and I'm advising. Again, they don't sleep. They're never in their own bed, and it's paying off. I mean, you have to go in. It's a compressed time frame. If you're doing an IPO in the securities market, and again, securities market, I'll leave you with this definition. There's 3 types of markets. There's the securities market. That's when you're actually selling part of your company, and the IRS recognizes it. You go in, you say, here, I'm selling 10% of my company for $5 million. I then have a net operating loss on my taxes, and that's a security. That's what Silicon Valley was built on, venture capital, angel investing. A security is not because you have a lawyer who's too chicken shit or doesn't want to, you know, make waves, and so he calls your non-security a security, because you're screwed then, because you're not getting the net operating loss. You're paying taxes because the IRS is going to say, this isn't a security. And if you really are adamant about being a security, then you're not going to get listed on Bittrex and Poloniex and all these places that say, well, the SEC says we can't list securities. Now, there's some creative models in between where, and they're coming out of Silicon Valley, and these are the ones that are not chicken shit. They're just creative. Chia Networks, for example, this is a totally legitimate way of sort of, you know, kind of doing the process, being conservative, but still, you know, not being chicken shit, is you go and you get a top VC, you raise a few $1 million, and then you say, that's going to get us to really build our product, and we'll see in a year if there's more clarity, and if we have to do a Reg A+, we'll deal with it. If we just have to airdrop, we'll deal with it, but it's, you know, getting funded and kicking the can down the curb a little bit. So that's my story. I'm sticking to it, and this is how to reach me. Thank you very much.